and good afternoon, everyone. I'm really, on behalf of Boston Consulting Group, pleased to welcome you to the panel. And we have an exciting set of speakers here and panelists, and they will share a lot of good perspective with us. Now, I am aware that we have learned a lot about digital transformation over the last 2 days. But today, what we're going to discuss here, we're going to deep dive into a specific topic, which is very close to my heart and close to a lot of the bankers here on the table. So we're going to deep dive on the complex product, which is loans. Yeah, I mean, the lending side of banks is really a revenue-generating product, but it is super complex as a product in itself. And digital can make a real impact in how we streamline end-to-end digital products. And that is one of the core topics we're going to discuss in this panel. On top of it, if you look at what are straight-through digital products on the lending side, we see a lot of growth happening there. They are still small in the market, but given a lot of trends in the market in terms of changing customer expectations, a lot of push on digitalization front to back on the banking side, on top of it, also the regulatory push to create more digital products. All of this is getting accelerated, and that's what we'll discuss in the panel today. Last but not the least, there's a rapid evolvement of AI and technology, which is also evolving a lot of these transformation. So having said that, let me open up the floor for discussion. And maybe I start with Rajeev. The first question is, there are significant investments happening on the digital, especially in lending products. What do you see from your perspective? Where are the technology investments going, and how are they shaping your institution in particular?
Yeah, thank you, Bhavya. Thank you for inviting me over here. If I speak from a Mashreq perspective and focusing first on commercial lending, our investments are going into 4 broad directions. One is, of course, to digitize the lending decisions. So we just went live with our in-principle loan approval journey for SMEs just about 2 weeks back. It pretty much gives you a near-perfect approval in about 15 minutes' time. It allows you to submit all information digitally. We pull information from various places. So it's close to world standard in terms of how lending can be done digitally. But we also realized, even before we did this, that one of the bigger challenges here is actual onboarding of a company. Yeah. The KYC is difficult here. The whole account opening process takes 2 to 3 months. So our early investment first went into that. So pure and simple onboarding and KYC of companies. Then we focused on this aspect of digitizing the lending decision. The third focus area was, how do we connect more directly with people who are serving SMEs? Take Virtue Zone, for example. Take IFZA. They are setting up companies or helping set up companies. So we have created direct API connectivity with that kind of agencies so that information can come in a streamlined fashion to us, and we don't have to ask companies to keep providing it again and again. A fourth kind of tactical thing was that we didn't want to wait to boil the whole ocean and digitize everything end to end, because sometimes it's not even possible, given the infrastructure that's available in the country. And there, what you need to do is to just focus on the biggest pain points. I'll take the simplest examples. That document digitization is probably one of the biggest pain points in any lending process. You're lending on the strength of bank statements or VAT statements, or simply taking extracts from the company register. We just digitized that. We worked with a fintech partner, we digitized it, and we've shaved maybe 7 days out of the lending decision process. So 4 broad directions, more to come, especially in terms of taking data directly from e-commerce platforms, but that's something that we will roll out in the coming few months.
Great. Thanks for sharing that. Maybe I come to you, Abdelrahman, from a Saudi market perspective, and specifically your institution. What have you seen in terms of investments in the technology side?
Yeah, no, absolutely. I think a very great question. And from our perspective, and maybe speaking from experience at Arab National Bank, we've really focused on 2 elements. So first of all, customer experience, I think, is the key thing and differentiating factor right now, especially as most organizations invest heavily in technology and digital. What we're seeing is essentially the banks that can offer a more seamless experience, the banks that can really offer you a quicker service, ability to minimize the touch points that you need, and also minimize the number of inputs that the client needs to give in terms of information. And especially in Saudi Arabia, I think we're lucky that there's a very strong government infrastructure in place that allows you to kind of centralize all of the key data points that you need on a client and be able to pull directly from these government services without asking the client for input. So what we're trying to do essentially is focus on this, really integrate as much as possible with the ecosystem that's available for conducting the correct kind of KYC, and then smoothing the process for the client. From A and B's perspective, we're, of course, looking at launching new digital channels, whether it's for targeted towards affluent banking, mass market banking, or youth banking, and kind of really tailoring each customer journey. In the end, they're all powered from the back end by the same systems, the same tools. You're asking basically for the same information because, of course, from a regulation perspective, there's no difference between an affluent banker and a mass market banker. However, what you do then is you tailor that customer journey to each client segment. Another key element also that I think we're looking at, and I think it goes very closely to what our colleague Rajeev said earlier, which is about partnerships with fintech as well. So can we really bring in a company that can maybe streamline a process or offer the service much quicker than the bank? As a bank, we hold a lot of capital and we're able to invest heavily, but maybe it's a bit more difficult or takes a bit longer for us to change and launch new products, and therefore sometimes a strategic partnership could be, let's say, more viable. And one thing we've done actually, especially for the youth banking segment, given as well how difficult it is to pull off in terms of like they need very specific requirements compared to the other segments, we decided to partner with a fintech called Kashi, and essentially Kashi now offers the youth proposition for our bank, and essentially if a person is below 18 and the family wants to open an account for them, they use Kashi, and Kashi will then handle these services. In the back end, it's powered by A and B, but front end, it's a more, let's say, customized experience for this segment.
Yeah. Well, thanks for sharing that. Any other perspective from anyone on the panelists?
Yeah, so I think, Assalamu alaikum, good afternoon. So I think before we talk about where we, as a ADB, where we've been investing, I think let me take you through a little bit about, 2 years ago, we went through a strategic changes. So the mandate was given to ADB from the leadership is for ADB to become the financial engine of the economy of UAE. So, and the mandate was very clear, deploy 30 billion over 5 years, support 13,500 of SME companies, and contribute 10 billion dirham into the GDP. So once these strategic direction has been lined up very clearly, I think if you look at our mandate is to support the SME ecosystem. So an SME, I'm sure a lot of you know that it's also segmented into micro, small, and a mid-cap SMEs. So I think the digital transformation actually touches every angle of these segments, and every segment has a different problem statements and opportunities. So for example, all the research shows that there are 3 critical opportunities or challenges that SME is facing. One is credit worthiness, a lack of understanding of how do we think as a banks. So it was very important to look at, how can we fill up that gap. So a lot of investment going there. We are working very closely with Emirates Banking Institution. We're looking at different, fintechs, different, institutions to support. How can we really build the financial literacy of the SMEs? Again, we want to make sure that every SME has the opportunity to become bankable. So the transformation is very important at this angle. Second issue was to do with ease of banking in UAE in general. I know my colleagues are here from commercial bank. We are, very federal driven. We are not here to make money. We are here to put pressure on some of the, commercial banks to really support the, micro and small SMEs. So a lot of transformation is going into on onboarding. Some of my colleagues have already touched upon it, but we have tied up with YAP to make it very easy for SMEs to come on board. So that's the second problem that we have seen. And the third one, which I think is an opportunity, and that's why all the commercial banks are here, is the funding gap. Yeah. So the funding gap is a big issue, and we have made a decision strategically to work with the commercial bank, with the fintechs, to fill up this gap as soon as possible. As you know, 90% of your GDP is driven by the SME. Now, 3 things where we are focusing on. One is on multi-cloud, where we are investing, and it's very important because it gives you the agility and and scalability and from a security perspective gives you a lot of support. Second, we are building a digital transformation. It's a middleware where we want all the partners, all the fintechs, all the commercial banks to come in, and they have only one objective. The middleware is to support the around 500,000 SMEs in UAE. And the third one is to do with the data lake. So we want to have a data lake where we can really pull and push data, where we can do instant decisions. So that will play a major role in a lot of embedded financing, where you have instant approval. So this is where EDB is really trying to support and focus on.
Great. I think it is great to hear this perspective. And Mahmoud, anything to share from your side?
From Ajman Bank, Assalamu alaikum everybody, first of all. From Ajman Bank, coming from a retail banking background, and I have seen both the retail banking in my heart and the corporate banking, which I'm doing today. When 5 years ago, I was attending such event, and the question was, everybody's going fintech, digital transformation for retail banking and consumer. At any point of time, we will be seeing the same what's happening in retail banking happening for corporate banking. And my answer was straight away, even if it's happening, it will not happen aggressively the same way what we have in the consumer. Years later, I proved myself wrong, and when I moved to transaction banking, and I've seen a lot of opportunities are there. First, we start to do at the transaction banking journey transitions. We focus on everybody's focus in lending, how my customer can reach me easy to do a lending. And however, I have seen the quick wins as the liability part and the accounts part, and how customer, I'll be easy for him to reach me for his deposits and for his liability. For that, we have done, we started our journey by make easy account opening. And the second thing was the deposits. The deposits and collecting the cash deposit from the client. I have seen a lot of incidents where the client is carrying a lot of cash, and he's going to the branch, the channels, to give him his deposits. Above 1 million or 500, the branch is rejecting him. To find such a solutions, we bring a technology in place, and we provide each corporate clients who have a heavy cash over there, especially trading and all, to have his own machine in his place. At any point of time, he is putting 5 million, 6 million, whatever, with whatever limit you want to put, immediately will hit in his account, and it will show. Then the second one was automating the checks. Customer, as of today, our clients is not required to walk out, have 100 or 1,000 checks, put it to a branch or put it to his RM. I provided them each a heavily usage checks clients. We provided them with a check machines from where he can clear his check as well as he is there in the branch. We have huge improvement on our online banking in terms of the transaction banking. That reduced a lot of traffic going to the RM and reduced a lot of traffic also going to the branches. It's still our journey to go. By next year, we are already working now on changing again our online banking to be more modern and more meeting the competitions. See, doing a digital transformation is partially an easy job. However, keeping this digital transformation dynamic and modern, that's a challenge, and that's why from where we're going.
Yeah, no, thanks for sharing the perspective, and I think it's great to hear that the strong push on digitization across all financial institutions, not only commercial banks, but development financial institutions. Maybe I deep dive on this a little bit more to say, what are some of the key enablers that you see to accelerate digitization? And what are some of the hurdles maybe in your markets, maybe it's regulatory or something else? Maybe Abdelrahman, if I start with you from a Saudi perspective.
Great. No, this is an important thing, and I think from a digital perspective, it's extremely crucial to have the right enablers in place. I think starting number one with the actual, of course, talent, and I think developing the talent and being able to have the right capabilities in place within the organization to support the digital transformation is extremely important. They are very different kind of skills from what banks traditionally have had, and essentially you're kind of recruiting and trying to become attractive employer for people who essentially would typically go for tech companies, typically go for the new generation companies, and suddenly as a legacy organization that's, in our case, for example, 40 years old, you're going and essentially trying to have them come and work for you. So of course your value proposition is extremely important, and then building this capability is crucial. I think at A&B we've been very lucky because we've actually been able to develop a very strong in-house digital factory that's been able to move things forward. Most of the digital channels and the online services that we have and the digital transformation technical capabilities are actually powered in-house, where we're focusing really on developing the core capability because, of course, from a risk perspective, you want to essentially be the owner of your own destiny. Another capability, of course, is the integration between your IT and your core banking system with the front-end digital aspects, and I think that's also very crucial. And this is something not specifically for my bank, but also for the banking sector in general. I think you have a lot of legacy systems, a lot of really old infrastructure that's been there for ages. Also, a lot of the interbank and like the global banking networks are connected using systems that are essentially like still working on, I don't even remember what the name was, but it was like the very old kind of programming languages. And being able to modernize this and move this forward and integrate it correctly with state-of-the-art architecture is extremely important. And of course, then investment in that element is very crucial. And you were seeing, I think, I'd say most of the banks that I've heard about, most of the banks that I've also worked with have been making, increasing investments in this whole core banking system modernization aspect. And then finally, of course, having, I think, it's not really an enabler, but I think it's a crucial prerequisite, is of course having a direct vision and a defined vision for your organization that comes from the top and is actually subscribed to by the major stakeholders and specifically the management team, really focusing on where you want to be, really being super focused on your client segment and what problem you're trying to solve. Because of course, banking is a very broad industry. There are a lot of different services, a lot of different client segments. So really looking at where you have a right to win is crucial. And I know this isn't probably an enabler, but I see it as a prerequisite for a successful digital transformation.
Yeah. Well, I think you laid out pretty much a lot of key enablers. Maybe, Rajeev, I come to you. Anything to add on this from your perspective at Mashreq?
Yeah, I completely agree with what you said towards the end, that one of the biggest enablers or one of the biggest impediments to digitizing lending is the internal mindset of the organization. If you're an incumbent bank, you have been doing lending for 50 years, convincing your risk management organization, your operational organization, and your front line that this is a digital world, here things will happen differently, they will happen faster, doesn't necessarily mean more unsafely, is probably the biggest impediment. If you get over it, your battle is half won. I also agree with what you said about aligning the investment dollars and the investment priorities behind the digital transformation is probably the second biggest internal hurdle. But then if I look outside, if you really want to do digital lending at scale, you of course need the regulatory environment to be supportive. I think relatively speaking, and I've seen this in about 20, 25 markets, I think UAE has a reasonably supportive regulatory environment for digital lending. I don't see huge impediments to commercial digital lending. Maybe it can't do 100% STP, but it can go 90, 95% of the way. Where probably more work is needed is the digital data infrastructure in the country. And I think the best way, and comparisons are never fair, but it's still worth looking at it, that if I wanted to create the ideal data infrastructure for commercial lending in this country, I would probably pick up the company identification infrastructure of either India or Singapore. Single company registry, API enabled, every line of data is available to a bank. You don't have to scan documents, you don't have to look at a blockchain, nothing, everything is available. I would probably look at Korea for digital invoicing data. Wouldn't it be lovely if all invoicing in the country was happening digitally on the same network, all invoices being accepted? Just imagine how much digital lending opportunity that alone will open up. Something that's happening nicely here, it's still some time away, is open banking. Yeah. That will make a huge difference. Because today, every banker in the room is probably using some tool or the other to digitize the bank statements and everything else. All of that will simply go away. So these are the 3, 4 things where I feel that more needs to happen. in terms of the external data infrastructure to enable full-fledged, at-scale digital lending?
Yeah. No, thanks for sharing. I think this is very comprehensive in terms of what enablers are required. Maybe I shift gears a little bit to look at the competitive landscape in digital lending, because as we all know, it's a rapidly evolving space, and there are a lot of new players, including fintechs, that are attacking the digital lending space. I mean, in our local market, UAE, one example comes to mind is Beehive, which is a very successful, peer-to-peer lending platform, which is also trying to grow, internationally. And I know the Emirates Development Bank is doing a partnership with them and trying to support them, which is great. But maybe I open up to the panel to discuss what are some of the emerging trends in fintech that you see from your institution, and how will that impact your digital transformation? Yeah. So maybe Shaker from your side, yeah.
See, again, going back to our strategy when it comes to speeding up or significantly getting into deployment of 30 billion. So I think we have decided to work closely with our partners. So fintechs are our partners very closely. We work with them. I don't know if a lot of commercial banks would like that, but we have partnered with those fintechs. The only reason we did that because we have seen that the past 2 years, I mean, this is it's a growing market. We have seen a lot of entities here like Fintech Hives or the IFC or ADGM or other free zones have opened their doors for a lot of fintechs to come into UAE. Yeah. And one thing they do differently to a lot of commercial banks is they are actually playing within the micro and small SME where a lot of commercial banks have stayed away. So we said, why don't we join hand? We have the balance sheet. They have the knowledge and the technology and the bandwidth to significantly deploy fund into the economy. So you mentioned it right. We have not recently. I think 2 years ago we joined hand with Beehive, and we have assigned 250 million of limits to them, and we have supported almost 120 companies with a span of 1 year. So look at the magnitude of how you can scale up. We also have lined up a couple of more fintech companies to join hand and help them. In addition, we also work very closely with commercial bank, to be very honest, where we want to also encourage them and to lend to the, I will say, maybe lower end of the SME. So we have launched our guarantee scheme, and it's been very successful. We have deployed almost 800 million. There are 11 partner banks have joined hand to really support the SME. So these partners are very important. In addition, we are being a federal government. We have also we have a very close relationship with a lot of federal governments where we, for our the data lake to grow, and we need to pull data because in the future it's all going to be automated when it comes to the lending, instant lending or embedded financing. So there's a lot of collaboration happening there. So again, as a development bank, we want to build this ecosystem between commercial bank, fintech, and all the partners through free zones or economic departments or even federal government entities to come and support. One main objective is to support the funding gap that we have.
Very clear. Maybe I come to Saudi market from Arab National Bank perspective. How do you see fintech impacting the digital lending space specifically?
Yeah, no, definitely. I think, Saudi Arabia specifically, of course, our regulator has been extremely kind of supportive of fintech coming into the market. I think it's no longer a question of, will fintech come in? I think they're already here. It's a reality. And I think it's up to banks now to learn about the best way to approach working with them. I agree with Mr. Shaker when he mentioned that they look at them as partners and they look at them for strategic opportunities, because I fully agree with that. And of course, when I say that, I'm literally saying it on my own behalf, because I don't think all banks are willing to work with fintech in, let's say, a strategic or productive way at all times. However, I personally see that the way forward is to strategically partner with them. In Saudi Arabia specifically, you have a lot of fintech coming in, such as Buy Now, Pay Later, which have really disrupted the market. We've seen in more advanced economies that Buy Now, Pay Later has actually kind of taken over credit cards and has completely almost replaced credit cards with the lower age brackets within the population. And essentially, this is a threat. And I think here in the Middle East, we have a very young population in general. And Saudi Arabia, more than 70% is under the age of 40. So really being strategic about this and taking an approach where you really look at the opportunities that fintech can bring rather than the challenges, I think will be extremely important. I think luckily for us, and specifically the organization that I work for at Arab National Bank, we do power more than 60% of the fintech in the market. So using our APIs and infrastructure, we offer banking as a service and kind of as the key go-to bank in the market, which I think gives us other opportunities as well to be able to forge partnerships with them. I think other elements as well would be related to not just the, let's say, the retail market, but also the SME. And I think I don't want to go too deeply into that because, again, Mr. Shaker, I think, gave a really good view about it. But essentially, SMEs, I think, are a very important segment for any economy, but at the same time, banks are not willing to work with them. And fintech have been able to find, the sweet spot of being able to support SMEs, give them loans in a commercial way where they can actually make money, and at the same time minimize the costs on banks. And I think looking at that and looking at these kinds of partnerships in that field, utilizing the agility of fintech and utilizing the lower cost model that fintechs use for operations is going to be extremely crucial for banks to be able to evolve going forward.
Yeah. Anything to add, Rajeev, from your perspective at Mashreq?
I'll speak more from my previous Standard Chartered experience because I've been here just for about an year. Two types of fintech partnerships. One which is more focused on solving a specific problem statement. You are a retail lender. You want somebody to come and solve for facial recognition and liveliness. Mm-hmm. Those partnerships are very easy to forge and they work very nicely because the two partners are not competing. They are very complementary to each other. In this market, people like Perfios who come and do just bank statement automation. Mm-hmm. Very easy to forge partnerships. The more difficult ones are where your interests are sometimes conflicting. So the fintech is a lender in its own right. 6-7 years back, it looked like banks will never cooperate with that kind of fintechs because the fintechs wanted to be lenders. Yeah. I think the reality set in soon that lending is not about lending, it's about funding. And when that reality set in, then we started seeing more partnerships emerge between fintech lenders and banks because banks had the balance sheet, banks had the brand name, and fintechs had the technology. Yeah. So I think now we are seeing more of those partnerships working as Shaker was describing.
Okay, very interesting. And I think one of the key themes also is, these digital transformation journeys are very complex. Be it fintech partnerships, be it core modernization, be it process re-engineering, they all require heavy technology investments. Yeah? And one of the big questions on everyone's mind is, how do you really measure ROI of such investments? Because otherwise, it's very important to get the business case out there. So maybe, Mahmoud, I start with you. How do you think about measuring ROI on tech investments?
See, measuring the ROI for digital transformation, it has two ways to look at it. First, the quick wins, which immediately you are going to get it very soon. And the second one, which is the advantage, which you are going to get it in the long run. When it comes to the quick wins, one, having said you have everything in place, your leadership believe in the digital transformation which you are doing, the mindset of the people, or everybody talks digital, you make your study very well because by the end of the day, you are going to cook this digital transformation, give it to your end client by the end of the day. So you should know the expectation before you start. Also, having the technology partner, the best technology partner who will be able to achieve your what you are looking for. If you have all of these things in place, the first quick wins one is the revenue generations. You will see that there will be an impact in the revenue of the organization very soon. Second thing is the customer expansion or the customer experience. By doing the best product reaching to the customer in the best way he needs, doing digital transformation and improve the customer experience. And when we are saying that improve the customer experience, we have seen a lot of digital transformation happen in the regions without studying the customer needs, don't know what exactly customers are looking for, and it has been failed. But if I started by studying the customer need and did a proper due diligence in place, I'll be able to get best customer experience, so increase my market share, then increase the revenue. One is the most important also quick wins is reduce my losses, which it comes from the delinquents and the provisioning clients. Today, if I have a proper data in place, I have, for example, an API which is applied, it showed me exactly where is our risk, which I have to focus, which kind of customer are performing very well and go for it. That will reduce much in my losses, and by the end of the day, it will be a quick wins for my digital transformation. There is a lot to say on in the quick wins one, but I will go directly to in the long run. In the long run, for sure, I'm going to, with having a proper setup customer study in place, I'm going to gain a customer expanding. My customer experience, it will be improved. My digital transformation is the dynamic change from day to day. So I'm going to meet my competitor in the market. And before the closure, the last and not the least, that when I'm selecting my technology partner, I'm putting my investment, that it has to be with the convince from the leadership of the organization overall. Yeah. There should be a belief on what we are doing. I really want to go digital, because you will find a lot of agree and disagree. We are reached to a point today for digital transformation, there's no place to disagree. As Rajesh mentioned, open banking is going to come very soon. And we have seen a lot of successful story in the regions. We have to be ready for that. The good part here in UAE and the regions, that is led by the regulations, which is not happening in a lot of places. Regulations themselves, they lead the transformation and fintech. They are supporting too much. They have the talented people in place who already are pushing this. So hopefully, it will add a lot to the organizations.
Yeah. Maybe, Shaker, you go next.
Yeah, I have a different view. I think if you would have asked me the question about ROI 2-3 years ago, I would have sat there and think about it for like maybe 2-3 months to justify the transformation. I think now everybody has the buy-in of the transformation. Everybody wants to move on a digitalization. So I think, I mean, I can see, on the right here, the CTO is here on one table, and I see the product head is here, and I see IT. So I think they're all aligned. I don't think ROI is the question right now. I think is the, scalability of how can we move fast. So in EDB, I think our model is a little bit different when it comes to working with partner banks and fintechs. We have we don't have an ROI. We have a sharing revenue of how we do things, because we don't build anything in-house. And to be honest, we are fairly new. We are 2 years old in a way when it comes to transformation. So the model that we work on is more of a sharing revenue and more of a working with the commercial bank, where they're going to be our distributor. We're just, a bank where we will support when it comes to the balance sheet. So the model is a little bit different, and I'm 100% sure everybody in this room will never going to question, the transformation.
Absolutely. Yeah. Abdelrahman, anything to add?
Yeah, if you allow me to just make a quick comment, because of course I know ROI, all my fellow panelists will be able to speak about for a long time, and of course the importance of ROI, it cannot be understated. However, I think impact might be the key word, and I think I've seen so many digital transformations kind of either fail or get hindered just because of impact. And keep in mind, and I know I'm sitting in a room probably full of bankers, but essentially we are still driven by shareholders who need to see impact, need to essentially see a big difference, and I think it's crucial to really just show impact to ensure that you have the buy-in. Because yes, I mean, and I've been in projects where I know for a fact this will transform the bank, this will move us to the next level, unlock revenue that we've never seen before, but they haven't seen it. And you tell them it's 3 years down the line, we're not, and sorry to quote a company name, but we're not Uber, where people are willing to continue to wait until you hit this profitability target, I don't know, 10, 15 years from the date of inception. People need to see impact right away, and I think it's crucial to just emphasize that when it comes to working with digital transformation in banks, which are, again, sorry to say, but legacy organizations.
I think, I agree that the debate has moved beyond whether digital transformation can produce ROI or not. Mm-hmm. The customers are pushing so much for that agenda that now the boards are not even asking that question. But is ROI not important anymore? Not really. This is still a world of business. There are many ways to digitally transform an organization, many ways to buy different types of technology or simply prioritize differently. And their ROI is still an important factor. I think The fact that it reduces costs is also by now well accepted. If I was taking 23 days to underwrite a loan for SMEs, and if I'm now taking 23 minutes, clearly somewhere it is saving me on costs. And my salespeople are free to go and do more business outside. So I think that's also well accepted. I think the part where I think the debate has moved now is the how. I'll give you an example. We had a real choice to make when we started digitizing our lending, that do we digitize end to end, or do we just digitize up to the decision and then bother about actually landing the money in the customer's account later? We went for the option where we said we will only give a decision. Why? Because when we spoke to our customers and we asked that how happy would you be if we could give you the money in 2 days' time? And the answer was, just give me a decision in 2 days' time so I can go on and do my business and book my next order. If you want to take another 10 days to actually physically give me the money, no problem. So actually the relative value that the client was putting on the second leg of the journey was extremely small. And thus, we moved our investments more to pure credit decision making, because that's what the clients seem to care about.
I think that's a very good point. Maybe last question in the interest of time is just deep diving on this credit decision making point, right? Obviously, this is a core element of any lending business, and now we see a lot of alternative data being used to actually assess credit risk of clients, yeah? So just want to get, there is a school of thought out there that could alternative data become mainstream in credit lending, yeah, credit decisioning. What are your thoughts on that? Maybe Rajeev, you can start.
Yeah. But a lot depends on the context. Which kind of clients are you trying to lend to? If you are lending to the unbanked, then alternative data is the only thing you got, and it has tremendous value. If you are lending to the banked, whether it is SMEs or individuals, if they have a bureau track record, then the value of alternative data drops somewhat. Within that also, you will find that for SME context, data coming out of e-commerce platforms, extremely useful. GST data or VAT data, India has done a great job on it, extremely useful alternative data. Telecom data, I have my doubts. It has neither breadth nor depth. It looks very attractive, but I have not found too many very good use cases for it. I think like all good things in life, eventually alternative data will get co-opted, and it will get used along with other data, which is now considered traditional and was potentially considered alternative data 20 years back. Bank statement data, 15 years back, was called alternative data. Yeah. Now everybody uses bank statements.
Absolutely. Abdelrahman, anything to add on that?
Yes, so I'll keep it very short because we're running out of time, but essentially I fully agree. I believe it is the future, but it also depends on the segment. I think, when you look at buy now, pay later platforms today, and I maybe was having some discussions with them previously, what they're using now in terms of literally your browsing history, and then based on that, they would, they access your cookies, see which websites you've gone to, create a social profile of that person, and then based on that, decide whether or not the person is creditworthy. They don't check, of course, any of the traditional, let's say, credit scoring and so on metrics. So I think definitely, you see it's working. You can see the delinquency rates and the default rates still continue to be very low, and it continues to be an attractive proposition. So, it works, but again, let's not also be, let's say, blindsided by the fact that this is a very specific customer segment with very small ticket sizes. When you come into the commercial and corporate and larger corporates, I think this is where I see a challenge, and I still do not see the level of alternative data similar to consumer lending that would enable you to make a decision on creditworthiness still outside of the core fundamental, let's say, financial metrics.
Great. Maybe last point, Mahmoud, and then we wrap it up.
Yeah, for the alternative data is for the consumer, again, there is a lot still to be done there. What I can see, as they mentioned, most of the investment and digital is going to the front end, is going to the interface. However, still for the data, still there is a lot to be done. And that will be based on the data quality, which they have it in place. Today, if I'm going to apply any digital transformation, like ABI, for example, or open banking later on, I should go deep down to find out, do I have the proper data in place, and then start working and build on this data. Quickly for the corporate banking, partially the digital can happen partially. Still, also still there's a lot of transformation to happen there.
Yeah.
But I think there will be a lot of changes later in the future, in the near future.
Right. Well, with that, I would like to wrap it up and thank all my panelists for their expert insights. Thank you all, and thank you all for joining us in this panel discussion. Yeah.
Thank you.
Ladies and gentlemen, our moderator, Bhavya, and panelists, thank you all very much.